Good morning. Welcome to Options Brew TV. I'm your host, Lex, and today we have a special guest. Her name is Paulina Likos, and I just said it wrong. I know I did. She is from U.S. News and World Report. Hello, Paulina. How are you? Thanks for coming on.
Lex, thanks so much for having me, and you pronounced it perfectly.
I did. You gave me two choices, so I got to admit, it was I could have gone either way, but no, good to see you. So tell the audience a little bit about, you're a reporter for U.S. News and World Report, right? You specialize, I think, in more market stuff, right? Is that accurate? Tell us a little bit about that.
Yes, that's right. So I'm an investing reporter with U.S. News and World Report, and I cover a lot of different topics, but mainly related to investing themes that we've been hearing about in the news, and the day-to-day stock market movements as well. I think that investors and traders are most concerned with a lot of things, including new ways to think about investing, because we're not in a the stock market is changing. The traditional portfolio that we tend to think about, for example, the 60-40 portfolio is kind of dead, some people would argue. So what I like to do is see what the market behaviors are out there with both, institutional and the everyday market participant, and kind of tease out what has been going on and what this means for the future. And I kind of write about those topics in an easy to understand way, because we know that sometimes these topics can be a little bit complex. So I hope I can bring value to your audience today as well.
Oh, terrific. Yeah. So I think, I deal a lot in the listed option space with traders and investors. And you made a good point. There's all different levels of understanding, right? And we like to try to keep it so that even the newest, entrant into the space can understand it, right? And I think that's always important. We always try to make it actionable and understandable for folks. And we're going to talk about a few topics here today. And some of this stuff can be difficult to understand, but if you can distill it down and make it understandable for the average trader, I think that's great, or investor, I should say. So yeah,
absolutely.
Good. Okay. So we had a big jobs report this morning, right? I noticed that on my iPhone this morning when it popped up, and it looked like it was a blockbuster number. Any thoughts around that today?
Yeah, so it was the jobs report for October, and it was a really positive number. So the headline number was 531,000 jobs were added in October, and the employment rate fell at 4.6%. And what this basically shows is that I think it's a good sign that shows that the labor market is improving. So I think what we might be able to see from here moving forward is that, more Americans are going back into the workforce. And for this particular jobs report, we saw leisure and hospitality kind of lead the way there as COVID cases are declining. And also, there's the dynamic where, since there has been a labor shortage, employers are raising wages to attract more workers. And this is positive, but it's also kind of negative because it hurts the inflation scenario that we've been experiencing. Inflation, of course, meaning the rise of prices of goods and services in the economy over time. And inflation has been elevated for longer than expected. Basically, I think one of the reasons why this jobs report has been a positive one is that experts are saying that because there was an expiration of the federal enhanced unemployment benefits back in September, this could have encouraged workers to go back and find work. So yeah, I think those are some of the key takeaways from the October jobs report. So hopefully we see a positive trend like that throughout the rest of the year.
Yeah. So I like empirical data, right? And by which I mean, I love going to restaurants. So I'm always in a restaurant, and my friends my friend has a restaurant too, and we talk about the labor issue there. and how difficult it's been for that business to find workers. And I think you hit on a couple points which could point to the reason. But man, I'll tell you, I was just down in the city of Chicago, and they're still having difficulty, staffing the restaurants. And you can just tell,
Mhm.
just from a user standpoint, you can just tell they just don't have enough folks for the amount of business they have. And it's crowded in these places. It's really difficult to get a reservation anywhere. It's unbelievable. So
It is. It's
yeah.
a big challenge, not only for the restaurant industry, but for so many different industries, because with less labor, you have less output of goods and services.
Hmm.
And if you just think about economics 101, when there is high demand for something but low supply, that puts pressure on prices.
Hmm.
So prices are increasing because there are more dollars chasing these goods and services, which are not, there isn't enough basically for the amount of demand that there is, and inevitably this causes a rise in the prices of goods and services, which is inflation.
Hmm.
And the Federal Reserve, which is the central bank of the US, they have been paying attention to inflation, and they finally acknowledged this past week that inflation is higher than expected,
Hmm.
and they're going to keep an eye on that, as they have been adjusting their monetary policy. So
Hmm.
definitely something that I'm going to keep an eye on throughout
Sure.
the rest of the year and into 2022.
Right. What's the most common lever that the federal government can use to sort of help out with the inflation scenario? Is there one? I mean, is it interest rates kind of where most people sort of fall?
Yeah, I think that the Federal Reserve has a few tools that it can use. What it has been doing, there has been discussion, and what we've been anticipating happened this past week. So, at the height of the pandemic, the Federal Reserve needed to address
Hmm.
the issues that were happening in the economy. We went into a technical recession, and what they did was started to buy up monthly bond purchases, which were $120 billion worth of bonds
Hmm.
on a monthly basis, and then lowered interest rates to near zero levels, which they are still at today. And as a result of this, this encouraged more economic activity. It provided more liquidity in the economy and into the markets. And a lot of the money found its way into financial assets like stocks,
Hmm.
which as a result, the stock market has been experiencing new highs basically throughout the past year.
Right.
And now, because the economy has been recovering and is on a positive trend of recovery, the Federal Reserve this week announced that it's going to reduce those monthly asset purchases by $15 billion.
Hmm.
So this will probably continue throughout 2022. And then the next debate is going to be, when are they going to start raising interest rates? So inflation is a huge indicator here, as you mentioned, as to how the Federal Reserve is going to respond in its monetary policy. So those are some factors I think people should pay attention to.
Okay. Good. Yeah. I the energy component of the equation too is interesting, right?
Mhm.
And I don't want to get political at all, but um, we seem to villainize the energy part of our country, and I see it in gas prices just around my neighborhood. It's insane what's happened, and ultimately that can't be great for the consumer, right?
Mhm.
That has to have an impact at every level, with inflation hitting that energy sector as well, right?
100%,
Yeah.
100%. Yeah. So energy prices have been elevated, and as we are heading into the winter months, I think consumers can expect a higher electric bill, in the months to come.
Hmm.
But this, challenge of rising energy prices is not unique to the U.S. It's really a global phenomenon.
Hmm.
I think a positive thing though is that because the U.S. is an energy producer, that is, we're not that we're not going to be suffering that much.
Right.
And another factor is that uh, Americans have a little bit more liquidity, a little bit more capital, cash on hand as a result of all of this stimulus and liquidity that's been in the market. So even though there might be some inflation in energy prices in the short term, they can address that. I think the challenge would be for countries like China, which is not an energy producer country. So they are going to have trouble because right now they're experiencing shortages. Their the Chinese government has realized that this is a problem and they've been ramping up production, but it's still going to be an issue. And then, of course, Europe is also not an energy producer, so they're going to have some challenges too. The world is looking to energy producers and energy exporting nations, and Russia is one of them.
Right.
So, yeah, I would say positives and negatives there.
Okay. Understood. Let's change gears. You ready?
Yes.
We're changing from inflation, jobs, energy to crypto.
Okay.
Are you ready? So you're going to educate me on crypto
topic.
because I am terrible on crypto, and probably because it just came about and I'm too old for this. So, it's beyond me. So I mean, it is a crazy surge. So, I'm at Tradier, right? And we have more requests for crypto trading than probably anything else right now. That's the number one item that folks are clamoring for, is to have a crypto offering. So what are your thoughts around crypto? I know there's all kinds of, there's Dogecoin, there's Ethereum. Maybe you can give us some differences and what we should look for relative to those. Any thoughts around that?
Oh yes, I don't even know where to start, but I'll just I'll just go for it. So
Okay.
there is surging demand for cryptocurrencies across the board, from institutional investors to retail investors. There's been, especially for the individual investor community, it's a huge community, and people really are believing in cryptocurrencies and the value that they can potentially bring in the future. So to kind of break it down, there are, I think, over 10,000 cryptocurrencies out there.
Oh, gosh.
And it's really easy to start a cryptocurrency. And we've been seeing that as a result of the new altcoins that are being put out there. But the cryptocurrencies with the largest market capitalizations and the strongest fundamentals are Bitcoin is number one, and Ethereum, which has the second largest market cap. And I think it's important to note that, even though there has been, they've been growing in market cap, which makes them grow in value, they're still an emerging asset class. Bitcoin has been around, I think it came to market around right after the market crash of 2008. So even though that there's a lot of attention and it's growing in popularity, there's still not much utility around it. So it's still being tested. So even though there are positives, I think it's important to look at the challenges and the risks. Of course, one of the main risks being its volatility. If you are considering to invest in an asset like cryptocurrency, you have to be prepared to weather these dramatic price swings. And if this isn't something that you're comfortable with, then you have to understand what your risk tolerance is for an asset like that. But I would say that a cryptocurrency like Bitcoin versus an alternative coin like Dogecoin, or the new alternative coin that replaced Dogecoin, which is Shiba Inu.
Shiba Inu? What does that mean?
Shiba Inu, it's a cryptocurrency. It was created in August of 2020, and it was inspired by the Shiba Inu dog. And this is crazy because Shiba Inu is now number 9 in terms of market capitalization for cryptocurrencies. which is crazy. Bitcoin's number one, and then this new Shiba Inu coin is number 9. And
Wow.
I think it's important to note the role of social media
Hmm.
in all of this, because as I mentioned, there is a huge community around, building all this hype around cryptocurrencies and alternative coins. And social media spreads awareness about it, and they create awareness, but they also create this kind of FOMO too, fear of missing out.
Right.
And I think, I would encourage, as people get into this space, to just do their research and understand the risks that are associated.
Sure.
Because the last thing I'll say is, because there are over 10,000 cryptocurrencies, in 10, 15 years from now, not all of these are going to be around. So
Right.
so it's important to have
Yeah.
some judgment
So
around.
what's the utilitarian value of? I mean, how do you use it for as a consumer? Can you buy a car with it?
Well, that's the thing. There isn't much utility. I would say that there has been some legitimacy around cryptocurrency with the recent approval of the Bitcoin futures ETF
Hmm.
that came out, um, and of course, countries are considering uh,
Right.
cryptocurrencies like Bitcoin as a legal tender. We know El
Hmm.
Salvador recently adopted Bitcoin as its legal tender. And there has been growing attention from institutional investors. So you have companies like Tesla, MicroStrategy, and many others who are allocating
Hmm.
a lot of Bitcoin on their balance sheets. And people are incorporating Bitcoin into their investing strategy. So they're allocating as little as 1 to 5% of
Right.
Bitcoin in their portfolio. So as there's more adoption in terms of investing, I'm sure there's going to be, companies starting to accept Bitcoin
Sure.
as a form of currency at some
Yeah.
point.
Makes sense. You know what I worry about from the trading angle is the fungibility of it. Meaning, if I have settlement in something in some sort of crypto, will it be deliverable? Because it's a finite number of things, I think, is from what I understand. So, lending, borrowing could be difficult. I'm hoping that options on that product could go to an ETF that follows it somehow someday. I think, that makes me feel safer when there's at least the U.S. government behind it as a guarantor of sorts, whether it's cash denominated or asset. So I don't know, but it's fun
Well,
though. That's causes some of the volatility, I suppose.
yeah, there are so many things that are contributing to the volatility. And that's the thing. If you're an investor in Bitcoin, that's volatility is a characteristic of Bitcoin. So you have to be comfortable with, it falling 5% on the day. At this
Yeah.
point, Bitcoin investors, they're not even concerned about the volatility, because they know in their hearts that Bitcoin is going to go to 100,000 by the end of the year. Of course, there's no guarantee, but
Right.
that's what they think. So,
Okay. Well,
yeah.
you mentioned a good segue. You mentioned Tesla in this conversation relative to Bitcoin, and I wanted to ask you about this Tesla news. Um, they they and Hertz are in some sort of collaboration where I think Hertz is going to buy 100,000 Tesla cars for their fleet. Is that accurate?
Yeah, so Tesla and Hertz, they're apparently in this collaboration where Hertz is going to buy, yes, I think it's 100,000 Tesla
Hmm.
EV vehicles, and as a result of this collaboration, Tesla became a $1 trillion company. Because after the announcement of this deal, Tesla stock soared over $1,000 per share. But then we saw a tweet from Elon Musk saying that the deal hasn't been signed yet. So there was a little bit confusion there, but
Yeah.
this would be the biggest deal that the biggest order that Tesla ever had. And it would be a big win for not only Tesla, but I would also say for the electric vehicle industry as a whole, because
Right.
this could lay the groundwork for renting and leasing more environmentally friendly vehicles.
Sure. It was interesting. Hertz a couple of years ago, maybe a year ago, was a bankrupt company, I think, right? And this deal is like more than that company was worth. I think.
I know, and that's the thing. I think if there's any, of course, there's risk everywhere, but Hertz is the company that's taking on the risk here. They're spending
Yep.
billions on this deal.
Right.
And as you mentioned, they filed for bankruptcy last year because they got hit as a result of the pandemic. So I think this deal is an opportunity for them to kind of rebrand or revive themselves.
Sure.
So that's how I see that.
Yeah. And I noticed that car, which is Avis, right? I think that got caught up in all this too. And I believe, if I'm not mistaken, that stock has surged because of all this. And I don't know, I didn't follow it close enough. Did you follow why car was involved in just going to the moon?
Yeah, Avis budget was yes, it surged this week,
Yeah.
and I think it has to do. Oh, I think it has to do with their adoption for EV vehicles as well. I
Okay.
don't know exactly what it was, but there's this theme of ESG that's been occurring in the markets for quite some time. And I think rental companies like Avis and
Hmm.
Hertz, they're realizing that they need to get market share in this
Sure.
space. So I think that's why
Yeah.
Avis kind of soared.
Okay. Yeah, I thought it was astronomical, the value when I saw it. I could be wrong about that. I'm gonna look that up afterwards though. Um, the other thing about this topic too. So I own a Tesla. Okay. So that's my disclosure. And I love it. It's a great car. However, my driving habits are about 20 miles a day, right?
Mhm.
So that's not much. I'm never going to run out of juice. I was always wondering, if I'm on a trip, like a week-long trip, and I go rent the Tesla, which I'd love to do, where am I charging this thing when it gets low? I mean, do I have to go to a supercharger and sit there for 20 minutes on my vacation? So I was kind of like, I don't know if that feels good to me. Um,
Right.
yeah.
Yeah, I would say there's some challenges there because I think one of the things that companies like Hertz and Avis need to think about is the infrastructure that's required to maintain these vehicles. I mean, I think they're going to be charging like $300 a day for customers to rent a Tesla.
Hmm.
Um, so I'm wondering if if they're considering where these cars are going to be charged. That is
Yeah.
a huge, a very, very real
Hmm.
concern.
Yeah, I know that. I know it's on their roadmap. The supercharging stations, which is great if they have them. Terrific. I think I'm a little more concerned about the time factor of sitting there. It's not even the best supercharger. I've done it once. It was like 20 minutes. It's not exactly filling up your car with gas. It takes about 5. So I don't
Right.
know. But we'll
But
see.
EVs are the future. EVs are the
I
future.
know.
You have your legacy companies like Ford and General Motors who are investing
Hmm.
billions into, EV production.
Yep.
So I think that this is our future.
Are you switching over to an EV, Paulina?
Well, I don't have a car.
Oh my gosh.
I use public transportation. I live in Washington, D.C., so
So
I
you don't need a car.
technically don't need a car.
Oh, good for you, Kyle.
Yep.
Yeah. I will say that I don't think I'll go back to a gas car ever again. I love this so much. It's awesome. It's like charging your iPhone every night. It's great.
Right.
Yeah. Cool. Okay. Well, let's finish up with kind of, we're moving into the holidays, right? What do you think? Any hot sectors that you're looking at as the year closes out? Will there be some supply chain issues with the holiday season and delivering all these gifts and what have you? What do you think about that stuff?
Yeah, so I think as we look into the end of the year, the last couple months, so we kind of mentioned some of them. So I think the energy sector is going to be a beneficiary of the environment that we're in, the inflationary environment. And that's the thing. I think inflation is going to be a theme that is going to influence investors into certain sectors like
Hmm.
healthcare, energy, consumer staples, and sectors like that tend to be sectors that benefit as a result of inflation. When it comes to the holiday season, I'm sure people might be thinking about holiday shopping.
Hmm.
I think because of inflation, consumers can be expecting higher than normal prices. So I think that's something that people should know going in. And another big factor here is the semiconductor shortage. So semiconductors are these little chips that
Hmm.
are in a bunch of electronics that we use every day, like computers, tablets, laptops, our iPhones, and things like that. But not only limited to that, they're also in electric vehicles.
Hmm.
And a whole host of other things. They're basically like the brain of electronics. And because there has been a global shortage, there has been a delay in production of things like iPhones and the Apple came out saying in its last earnings report that there's going to be a fewer production of iPhones and
Hmm.
other products as a result of the semiconductor shortage. It's also been really difficult for the auto industry to push out more of its production of its cars. So the semiconductor shortage is going to be a huge issue, not only for the holiday season, but also throughout 2022 and maybe even towards the beginning of 2023.
Wow. Wow.
So yeah, that's going to be a challenge.
So, it seems like Elon's managed around that a little bit. Is he producing these semiconductors himself, and he's not leaning on the overseas market for that, or uh, something else going with him?
Yeah, you're totally right. I mean, even though there has been this global shortage that
Hmm.
has been impacting so many car companies, Tesla has been resilient.
Yeah.
And I think it's because I think they started producing or addressing their own, trying to build out their own semiconductors, but a part of that has been they have alternatives, semiconductor alternatives,
Hmm.
so they use different types of chips.
Got
So
it.
yeah, they've been able to work around that.
Okay, great. Well, that's some great stuff. You know a lot about everything. I'm impressed.
Thank
That's
you.
unbelievable. So this was really fun chatting with you. I really appreciate you coming on. And I'd love to do it again sometime. This would be great.
Yeah, absolutely. I'd love to. Thank you so much, Lex.
Okay, great. We'll talk soon.